Hey guys, it's the Helpful Dad again with continuing our series on gold and silver investing. Now, as always, I want to advise you, I'm not an investment advisor. I'm not giving you investment advice. You can and should make your own financial decisions. But if you agree with investing in gold and the benefits of owning it, then you probably want to know, should you buy gold, physical gold coins and bars, or should you buy one of the gold stocks like the GLD? Well, we're going to focus today on that particular discussion. I'd love to know your thoughts. You know, the GLD is the most popular of all the gold investments and online gold investments, so to speak, and we want to have that discussion today. So we'll start with our discussion of the exchange-traded funds. Again, there are multiple exchange-traded funds, the IAU, there's even the PHYS, which is a closed-end mutual fund, but we're going to focus on the GLD first, and then we'll talk about physical gold as well, too. So in terms of the GLD, you know, it is the Spider Gold Trust. It is priced at approximately 1/10 the value of an ounce of gold. So if gold's around $1,700, this would be around $170. Its expense ratio is 0.4, which is a little higher than other ETFs like the IAU. But it is the most liquid of all of these all of the online gold stocks, so to speak. And what that means is, you can trade, have a much lower bid-ask spread, particularly in the options market. There's a lot more options for this, and the bid-ask spread is a lot smaller, which is very important if you're playing options on the up and the down slope. So that's really the positive thing about the GLD, and you can get in and get out of it quickly. If you're in gold for the investment purposes only, and you really care about the liquidity, then the GLD is the fund for you. That being said, though, there is the big wild card on this one, which is that do they really have all the gold they say they have? You know, the custodian is HSBC Bank out of London, and according, if you read the prospectus, they will actually tell you that it doesn't actually have 100% daily gold allocation in bullion, because there is the kind of this wild card of how much the custodian actually holds, and there is a potential for unallocated gold, which could lead to, quote, a negative custodian event, which would lead to loss for the investors. What does all that mean? Well, a lot of people speculate is, do they really have all the gold they say they have? If that's a real concern to you, and from a long-term perspective, in the event of financial disaster, it could be, then you want to keep that in mind. If you're just into it, like I said, for the short-term aspect of it, you are playing gold only for the investment value, you want that liquidity, you plan to get in and get out, that's fine. I own the GLD. I've owned it in the past. I own it now. I play the options market on it. I've got no concerns about owning this, on a short-term basis, a few months or even a couple years, But from a long-term perspective, with that wild card out there of not really sure if they actually have all the gold they have, what would happen, in the event of a mass run of redemptions, that I'm not really quite comfortable with that. So because of that, let's focus now on real gold that you can own and hold in your hands, like this U.S. Gold Eagle right here, one of the most popular gold investments of all. What are the benefits of real gold? Well, again, like we've talked about in other videos, you possess it, you hold it in your hands. There's no question on whether or not it actually exists. You can see it. It's real money. It's not paper money. It's not backed by government promise. It has real intrinsic value. It will never be zero. For thousands and thousands of years, people around the world have valued gold and silver, and that's really not going to change. Physical gold is considered to be a very safe investment, a private investment. It's very portable. You can store a lot of your wealth in a really small amount of space. It's really a protection in the event of financial crisis. These are all very positive things. It has worldwide recognition. Wherever you go, you can know the value of gold. It has potential advantages in the event of, inheritance, passing these coins on, to your children and things of that nature. But, there are some issues too. Where are you going to store it all? Is there a risk of loss or theft? If you're going to store it off-site and there's a financial disaster, can you get to that safe deposit box or something like that? It's also not very liquid. If you needed to sell in an emergency, you wouldn't really be able to do that. You got to take it to a coin dealer and try to get the best price you can. It really discourages timing the market, so it's really not a great investment vehicle in the short term. Could be for the long term, but not the short term. It's really more designed to be a hedge against inflation, to protect your purchasing power over the long term, and to store your wealth in something that really is there and really exists. But the question is, it can be very expensive. One share of the GLD is $170, but one ounce coin is $1,700 or more, depending on what the price of gold is at that time. So what can you do if you really can't afford that? Well, maybe you should consider buying alternatives to a 1-ounce coin. Maybe you should look at some of these fractional options. You can get the Gold Eagle in 1/10 of an ounce, a 1/4 ounce, a 1/2 ounce, something like that. That could be less expensive for you. You can also look at other options. Now you have these pre-1933 U.S. gold coins, these St. Gaudens, these other gold coins, but they carry an even higher premium than the Gold Eagle would. So if the Gold Eagle is say 80 or $100 above spot price, that you're paying the dealer to own that, these 1933 coins could be even more than that. So unless you're a real collector, you may not want to look necessarily at those particular aspects. Maybe you want to look at some other world coins. Like here's a British sovereign. This is 0.2354 ounces of gold, about a 1/4 ounce of gold. It has a lower premium often than the Gold Eagles do, certainly than the pre-1933 gold coins do. So you can get a 1/4 ounce, maybe around $300 or $400. That's something that you want to consider. You can also look at other options. You've got a French franc. This is 0.1867 ounces of gold, almost a 1/5 of an ounce right there. Again, has a lower premium. Maybe $250, $300, something like that. You can get this coin as well too. So that's another way you can get multiple coins for the price of one 1-ounce coin. You can also look at something like we know the Krugerrand is a very popular coin, and you can get that in 1/10 ounce, 1/4 ounce, full ounce. But there's also the 2 Rand, which is I think 0.2354 ounces of gold. So that's another way for around $300 or $400. You can get multiple gold coins for the price of one 1-ounce coin. So that can give you the option to own. If you want to own multiple coins, or you can store a lot of your wealth in a 1-ounce coin or a larger bar or something like that. It all depends on what you need. In my personal opinion, again, I'd love to know your opinion, I see value in owning both these ETF, these online gold stocks, as well as owning real gold. Again, for the short-term investment aspect, whether you want to play gold going up and down, the options market, things of that nature, you need the GLD for that. But for a long-term hedge against inflation, if you want to protect your wealth in something solid, you want to get out of cash, there is the potential to put it in real physical gold that you can hold in your hands. And so that's what I see. I've got a combination. I think that's best, but I'd love to know what your opinion is. So please share your thoughts with me in the comments section. And until we talk again, God bless you and have a great day.